In my last video, I talked about the apps that you need to start trading forex. That is the FX book app, the Traders app, the TradingView app, as well as the Meta Quotes app. That is the Meta 5 trading app to be precise. Hello guys, and welcome to my YouTube channel. My name is Olufela Enito, popularly known as Ika. And in today's video, I'll be doing a complete tutorial on how to use the TradingView app. So be sure to stick around to the end of this video, because I'll be showing you some tools that you need to favorite so that it will be for easy access to be able to use for technical analysis in this app. So as you can see in my screen here, I have some tabs at the bottom of my screen. That is the watch list, the charts, explore ideas, and the menu tab. So I'm not going to be really talking about all these, because you almost won't need to even use them every time. But I'm just going to be focusing on the main aspect of this TradingView app. That is the chart itself. So this here is the watch list screen, and with this watch list you can add or remove currency pairs that you want to trade or analyze. So I'll just click this plus sign button at the top right corner of my screen. So once I click it, you can see suggestions of currency pairs that I want to add already there. You can see currency pairs, you can see some other instruments beside currency pairs, like this Nvidia stocks, this SPX, Tesla, and so on and so forth. So I'll just simply type the currency pair that I want to add. Let me say Euro USD, EUR USD. So you can see different brokers. The brokers are the ones on the right here. That's the FXCM, OandaCapital.com, Forex.com. So these are the brokers that provide different market data for this currency pairs. It's not as if the information they provide are different, but you can choose to analyze the market data provided by a particular broker. So let me just open the one for Oanda, because that is what I use. So I'll just click the plus button. You can see rows added, currency pair added to my watch list. So I'll just close it, and you can see that it has highlighted it. So you can just click it ordinarily like this normally to see how the market has been acting for days and even months behind. So you can scroll down to see how things are. So this is not even really where I want to be, so I just close that tab. Meanwhile, this my chat button here is for the technical analysis. This is where the real deal is. As you can see on my screen, I have green and white colors, green and red colors on my chart, and these are called candlesticks. Understand? The green side is the bullish candle, the red side is the bearish candle. So now in these candlesticks, there are two types. They are usually of two types. That's the bullish and the bearish. So now the bullish signifies buy, and the bearish is green. So this bullish is made up of two characteristics. That is the body of the candle. Let me zoom in so you can see it. Okay, that is the body of the candle, which is this is the body of the candle, and the wick, this very tiny thing here. This very tiny thing here is called the wick. This tiny thing here like this. This is called the wick. It's called wick or shadow. This is another wick or shadow. So these are candlesticks. This is the bullish candlestick, and this is the bearish candlestick. So now, whenever you see a bullish candlestick, the bullish candlestick starts at the bottom. Usually, the price usually opens at the bottom. This is called the open of the bullish candlestick, and the price closes at the top. So this is called the close. Like this is the wick. This one here is the wick here, and this is the body. The wick is also called a shadow, just like the way you have a normal candlestick and that has a wick now. So it's called the wick. So the bullish candle closes at the top and opens at the bottom. That is where prices start for bullish, and the bearish candle is the other way around. The bearish candle opens at the top here and closes at the bottom. So what I mean exactly by this open and close prices is that technically on the charts, when candlesticks fluctuate, you understand, that is when market prices occur, when transaction is going on, when the buyers buy and they get to a certain level of conclusion, like maybe at a closing price or maybe auction price, the sellers are the ones that are now come into play. So like when you see candlesticks face opposite direction, it simply means that the price at which a currency was going has just like basically reversed, like that's dropped. Do you understand? Like now if you see these candlesticks now, you can see the bullish candlestick from where it opened. You can see that it is like from the open price there is going up. Let me show you this instance. Let me show you this place now. For instance, you can see that where this bearish candle opened here, when it opened here at this price, it came down here. See how the price is reducing. It came down here and closed here. Then when the buyers came in, it just simply opened here too for the buyers, this bullish one here, and the price went back up. I know that for forex to happen, you have to buy to sell. For like, do you understand? Like for forex to happen, like you have to buy to sell to be able to make profits from the market. So this basically explains how these candle sticks are on the charts here. So if you've enjoyed this video so far, please like this video, comment on the video, subscribe to this channel, and also turn on post notifications to get more content that I make. So now these candlesticks here that you see on this chart are a type of chart pattern used in trading to represent price movement over a certain period of time. Each candlestick typically show the open, that is for a bullish, for instance, like I explained, this is the open here, low, that's the wick, and also close prices for a specific time period. You understand? So now that brings us to what we call time frames. You understand? So like know that any time frame that you are trading, a candlestick represents the time of movement that it takes for a candlestick to form. For example, now I'm on the 5 minutes time frame. So it means that each candlestick here on this chart is 5 minutes. This is 5 minutes. This is 5 minutes. This also is 5 minutes here. Everything here is 5 minutes. You understand? So if I should switch the time frame to 50 minutes time frame, each candle here on my screen right now is 15 minutes. It takes 15 minutes for a candle to form. So that's 15 minutes. Let me use my crosshair function. This cursor I'm moving right now on my screen is called the crosshair function. So it's just like to like it's like a cursor on your chart that you can use on your chart. So if you see, when you can see I'm on this candlestick now, and it showed me 15:30. The next candlestick is 15:30. It's supposed to be 15:35. Okay, 15:45 because it's 15 minutes, and this other one too, 4 o'clock 1600. So like every candlestick here take 15 minutes for you to form, as well as other time frames too, like 30 minutes. You have the 30 minutes time frame, you have the 1 hour, and so on and so forth. You can set the time frame, the preference of time frame that you want to include on your chart. Do you understand? So like these are the time frames that I like to work with. Some of them I don't use, some of them are what I like to use. You understand? You have the 2 hours time frame, you even have the 3 hours, you have the 45 minutes, you have the seconds time frame too, you have the 1 day. But before you to be able to use some of these time frames, you have to be on premium plan to be able to use some of them. So now for you to make big profits or enormous profits in trading, your key interest should be focusing on higher time frame candlesticks, because with these time frames the candles are larger, as well as the strength in their trends are stronger too. This is where you find different types of traders in regards to their trading style of technical analysis. So there are 4 different types of forex traders by time frame. Technically, you have the scalpers, you have the day traders, you have the swing traders, and you have the position traders. So scalpers are those traders that don't intend to waste time in the market, and with technical analysis they usually over around the 1 minute to 4 hours candles. Profits made by these scalpers are often Profits made by these scalpers often vary because of the time frame they choose to scalp. But you must know that as a trader, the higher the time frame, the stronger the trend, and the larger the profits. And loss too, and the quicker the loss. So meanwhile, the other ones, that's the day traders, often tend to hold trade position for a longer period of time. They usually hold trades in the 4 hours time frame, that's this time frame here, the 4 hours time frame, and the daily time frame. You know what I said about the time frame, that each candle here represents the time frame that you are on. So this candle here is, every candle here is for 4 hours. If you look at it, 4 hours difference, 4 hours intervals, 4 hours, 4 hours, 4 hours, and so on and so forth. So the day traders like to over around the usually around the 4 hours time frame to the daily time frame, that's the 1 day time frame. So profits made by this trading style is much more larger than a scalper. So you have the swing traders, like I also explained. These traders tend to hold trade positions for a longer period of time. They usually hold trades in the daily time frame to the weekly time frame. So this is the weekly time frame here. So you see this one is 1 week, 1 week, 1 week, 1 week intervals between them. So they usually hold trades in the daily time frame to the weekly time frame. Profits made by this trading style is much more larger than the day trader, and like your stop loss, your loss is always often far from when you enter a trade. So the last one is the position traders. They hold positions for as long as months to years. So they can hold a position starting from this part of the candle open here to this part. So if you see, this is like a month's interval. You can see August, July, June, and so on and so forth. So this position traders like to over around this particular time frame and a higher time frame than this. They like to stay around the 1 month to like years time frame, even 12 months time frame too. So but because of the length at which you have to hold a position as a position trader, most people don't trade this way because of impatience. Now there are more types of trading style. there are many more types of trading style traders incorporate with these styles, which are fundamental analysis and technical analysis, where fundamental analysis basically deals with the incorporation of news regarding to intended currency pair to take, how it affects the trade, or how it is likely to affect it, while the technical analysis part focuses solely on chart patterns, candlestick patterns, and other strategies. Now, whether or not you close your trade positions, whether or not you close your trade positions, or whether or not you close your trade positions partially, or you hit profit targets, using a well robust trading plan in regards to stop loss, risk management, market confidence, that's your entry, and market execution are all that make you a profitable trader. So you can always choose any of these aforementioned trading style, or you can choose any of these trading styles depending on your personality or lifestyle. So you can choose to be a scalper that just deal with technical analysis. You can also choose to be a day trader that incorporates fundamental analysis, that is your news, you looking at the economy of whatever currency pair you are trading, looking at the news, and also using your strategy technically on the chart. You can choose to be a swing trader too, and also be a fundamental trader and a technical trader. Do you understand? So like everything is just in regards to how you want to place your trading style, or everything depends on how you live. You understand? Like your trading style depends on the kind of person that you are. So like the market is open 24 hours, so 24 hours for 5 days. So like that gives you more chance to, even if you miss a trading day, you can also trade another day in a particular session, or hold the position for a long time, or a short position. So that is it. Please like this video, remember to like this video, and comment whatever it is that you feel about this video. Let me know your suggestions too. Please subscribe to this channel and turn on post notifications. Ordinarily, these bars are supposed to be moving, but because I made this video on a weekend, so like the market is officially closed, I'm going to use something called the bar replay to explain what I want to explain next. You understand? And it is called pips. What I want to talk about next is called pips. So let me scale down to a lower time frame to be able to use that bar replay so you can see it. So now what I'm about to show you is called a pip, or it's called pips, and these are movements made by candlesticks in the market, just like we count our movement, that is human movement, with feet or steps. You understand? So pips are used to count candlestick movements, and the pip has a smaller fraction known as the pipet, which are what make up a pip. A pipet is also known as a quote. For a pip to form, it is made up of 10 pipettes. So let me do the bar replay so you can understand what I mean by that. So look at observe the prices. You can see the movement of the candles. So these movements are called pips. So that's about that. Please, if you haven't subscribed to this channel yet, please do well to subscribe to my YouTube channel and turn on post notifications. Like the video and comment on it too. Thank you. So that's going to take us to what I'm going to talk about now, which is the currency pairs. On the top left corner of my screen, you can see the currency pair euro/US dollar, which is this here that I just clicked. Currency pairs are quotation of two different currencies. They are usually quotation of two different currencies where one currency is quoted against the other. For example, this Euro USD currency pair, it represents the euro quoted against the US dollar. So the euro is known as the bid price, and the US dollar is known as the ask price, which is also known as the buy and sell price, as well as the base and quote currency. So the euro is the bid price, which is known as the base currency, which is known as the buy currency, while the US dollar is the quote currency, known as the ask price or the sell currency. So what then is the bid and ask? In forex trading, the bid and ask price is the price at which you can sell a currency pair, and the ask price is the price at which you can buy a currency pair from your standpoint to the investor. If an investor is buying, that is if an investor is buying from you. Meanwhile, if you are trading online, it's always you buy from the investor, that is the broker, that's the broker giving the market, for instance OctaFX and all those other ones, IC markets and all that. In other words, in this scenario, the bid price is the price where you buy a currency pair, that is the euro, and the ask price is the price which you sell the currency pair to the investor or the counterparty. The bid price is always lower than the ask price, and the difference between the two is known as the spread. I think I already explained this earlier in previous videos. The bid and ask price are constantly fluctuating, like I showed you with the bar replay button to show what pips are. So like you can see, the bid price always fluctuates. Pardon me, let me do it again. The bid and the ask price are constantly fluctuating based on supply and demand in the market, and they are quoted in pips. As you can see the movement of the candles, you can see on the right side of my screen the prices are changing. That's the fluctuation of the market, so which is usually based on supply and demand, and they are usually quoted in pips. Traders can place market order to buy or sell at the current bid or ask price, or they can place limit orders. All this I'm going to show you. If you are subscribed to my channel and you leave the post notification turned on, you get to see more content, because I'm still going to talk about them in my next videos. But in this video, I'll be showing you the key tools that you are going to be using throughout your trading career, at least if you stick around this channel, because on the long run I'll be taking live trading sessions, so you see how my strategy works out. But for now, you need to get the basics of how the whole technical analysis work and the fundamental analysis too as well. So what really are the differences and similarities between the bid and the ask prices compared to the base and the quote prices, as well as the buy and the sell price, how they relate with one another? So now the bid and the ask price at which is the price at which a buyer is willing to purchase a currency pair in the forex market, while the ask price is the price at which a seller is willing to sell a currency pair. The difference between the bid and the ask price is known as the spread, which represents the transaction cost for trading. Base and quote currency in a currency pair, the base currency is the first currency, that is the euro, and the quote currency is the second currency, that is the US dollar. For example, in this pair above, the euro is the base currency and the US dollar is the quote currency. Now buy and sell. The buy price is the price at which you can buy a currency pair, that is the euro, and while the sell price is the price at which you can sell a currency pair. So when you buy a currency pair, you are buying the base currency and selling the quote currency. When you sell the currency pair, you are selling the base currency and buying the quote currency. So far so good. The relationship between the bid and the ask price, the base and the quote currency, the buy and the sell price is basically the same. The bid price is the same as the buy price, as it represents the price at which you can buy a currency pair. The ask price is the same as the sell price, as it represents the price at which you can sell a currency pair. The base currency is used to determine the buy and the sell price, as you buy or sell the base currency in a currency pair transaction. In summary, the bid and the ask price and the buy and the sell price are essentially the same, with the bid and the ask prices. So in this discussion, the next discussion, I'll be talking about how this really actually works. So I'll be using the XUUSD for example, because that is the pair that I like to trade. So like I said, you don't have to always trade the whole basket of currencies until you become a professional or profitable trader. There isn't no competition in this, so nobody's getting any leadership trophy at the end. Just make sure you get them Benjamins. Make sure you get that money. Make sure you get that moolah. So I think I said this earlier in my previous videos, that it's always better if you are best at least one currency pair in trading, especially, other than very little of all the currency pairs. So which is why I choose gold. Minus that, gold is a volatile pair that I like to trade. So let's get to gold so that we can get on to the next things after this explanation. Nothing ever beats having your currency pair, most especially when you have a trading edge. That is your strategy. All you need to do is stick to it with consistency. That's where you'll be able to know a lot about the pair so much, because of how much you are familiar with it. You can easily predict the market structure. That's all this that you are seeing on the screen. You can predict the market structure, the volume time, and many much more. So don't be surprised if all I talk about throughout this whole phase of learning forex, and even when we go into live sessions, it's just about XUUSD, because that's what I trade, which is the main scope of this technical analysis. One thing you should remember is that when you see XUUSD, from your practices of fundamental analysis and what I just explained about the bid and the ask price, XAU is the base currency, while the USD is the quote currency. So if you have a XAUSD pair, it means that you are basically speculating that gold price will strengthen, that is XAU will strengthen compared to the US dollar. So you sell your US dollar to buy XAU, and when XAU strengthens from a weak price to a much more higher value, you can sell it to get profit, which is also known as a spread. Let's take another example, but this time I will not use XAUUSD. Let me use another pair, USDJPY. Let's take a sell trade on USDJPY, knowing that USD is the base pair and JPY is the quote. Now in this case, you are strongly speculating that the US dollar will lose its value, so you buy more JPY, Japanese yen, by selling your US dollar, thereby not just only making profit off the current strength of the US dollar, but also buying JPY at a lesser price, that is at the weak value stage. Remember, for forex to happen, you have to buy to sell or sell to buy, meaning that you cannot have one strong currency and have its quote or base to be strong. So this way there is no spread. You really do, there has to be a weak side, because you must sell at a high price of either your base or quote currency and buy at a low price of another base or quote currency. So how forex works is that you are selling high and buying low, which will now result to you having profits. That's also called your spread. So sell high, buy low, That's how you make your money through trading. So I'm going to be showing you the tools that I said at the beginning of this video that you'll be needing to favorite, like for the strategy that you are going to use. At least any basic strategy that you are going to use in the market, you are going to really need those tools that I'm going to show you. So make sure you continue to stick to this video, watch this video to the end, because I'll still reveal some more other things that you need to do in this video that are important too. So but meanwhile, if you have not liked this video, kindly like this video. If you have enjoyed it so far, subscribe to this YouTube channel and turn on post notifications. Comment in the comment box, let me know your suggestions or whatever questions that you have. Let's start with the trend line tool. So this is the tool that you want to add as your favorite. So the trend line tool is used to carefully mark trends on the charts. Candlestick trends, for instance. Now let me spot a trend. Okay, I can see a trend here. I see a trend on my chart. So just simply mark my trend. So there are other cool features that you can use to modify your tools, like the color. You can choose the type of color that you want. You can choose any color, as well as the marker size, also the style of lines that you can use. You can also choose to leave it in angles too. Then you can lock it. This lock feature is to not move it accidentally when you are like scrolling on the screen. So like you can see, I cannot move the tool anymore because I have it locked. But if it is not locked, you can see how I can move it. I can move it like this. I can move it anywhere, do anything like this. So you can use the trend line to mark trends diagonally, any trends that you spot in the market. And this trend line tool is best used with trend line trading strategy or trend line trading breakout strategy. For trends like this, when you are trying to look for a break to this high here, I'm trying to look for a break up here like this. I'm coming out to transport the break. So you can use this trend line tool to spot a breakout of structure. You get me to this upside there. You know that there's going to be volume from here. Once there's a breakout of this whole trend, you know that you expect the volume up here like this. So the trend line tool is a great tool that you can use, and you can also mark the like add text to it. Let me see, trend spotted on the 1 day time frame. So you can choose to edit it like how you want the font to be, top, right, you can see. So you can do this. All these are the extra curricular activities of your tools. You don't necessarily have to do this. You can choose the length at which you want it to go, like especially when you are trying to mark a market price. You can just do it this way. You can see how the thing has increased. So all these, or even other tools to all have this feature, this modification feature. So you can see how you can do anything that you want to it. You can set it out whatever way you want to set it. So now let me move on to the next one. The next one on my list is the next one that I use, the horizontal line to add it to favorites. You just want to add to favorites, you just hold it and add or remove from favorites. So I'm going to add it or remove it. If you are using a PC, it's going to be different. You'll see it, you just see the star and just like star it for it to add it to favorites. So this horizontal line tool is to just mark the supply and demand on the candlestick. Let me see, for instance now. Okay, let me look for I'm looking for a good spot to be able to use it so that you understand. Okay, let me just save for here now. So this is my horizontal tool. You need to mark this type of level, like this market price. You see it has marked the price for me. This is 14381. It has its own features too. See, you can do anything that you want to with it, like we did with that other tool. So let's not waste our time. You can also lock it and also add your text. Can do that as well, and also change the coordinates. Let me put it at another level. Please like this video. Remember to like this video, subscribe to my YouTube channel, and turn on post notifications. Please drop comments in the comments box and share this video to your friends too. So you can see how these two work. The horizontal tool is another tool that I like. Remove them. So another tool that I want to add is my arrow tool. Pardon me. Let me add it as favorite. You can see how they are adding up so that it's for easy access. So this is my arrow tool. You can just use it to mark vertical or horizontal lines depending on your kind of strategy. So you don't necessarily have to use all these tools that I am using, but like these are the tools that I like, that I use along with my strategy. So that's what I'm showing you. At least any basic forex trading strategy would need all these tools at hand. So you can use this arrow tool to mark up anything, and it has the same features too, like the other tools. That is the same features. So the next one is my rectangular tool. Okay, my rectangular tool. Now the rectangular tool can be used to mark a part of the chart, like when you want to enclose a particular area on the chart. Let me say, for instance, you are seeing too much support and resistance, and you want to like type a reminder of a no trade area. Let me look for cluster on the chart. Okay, for instance, now there are too many support and resistance zones here, so you can just do this with the rectangular tool. You can just do this. You can just do this. So you can add, you can also change it to anyone that you want. The text, when you type it. So you see how it works. So that's about that. Another cool tool is the let me see, I'm looking for the position tool. Okay, so you need these tools. This is to set your entry price, your stop loss, and your take profit. So what this tool is used for is when you have done all your analysis and you're about to enter the market. So as you can see here, you can see this current candle, that is this one here, is showing a bullish candle. So if you want to take a buy trade, what this tool does is that it will help you mark the price. Let me say this is at 143851 here. You just place this buy tool. This is a long position tool. You have to try and observe how the diagram looks so that you don't make mistakes when you are trying to place the position tool. You understand? So now you can see how the position tool is. The TP is up, the entry is at the middle, and the stop loss is at the bottom. So I'll just drop the position tool on this side, so you can see that show me what risk to reward ratio I am using, or I'm going to get from this trade. So you can edit it too. You can change the colors if you want to. Depends on your choice. You can change it. You can leave it at that. So that is one different. That is one style too. You can just put the lot size that you want to use for your trade. That's when you're about to enter your trade on the MetaTrader. So but then you want to get the accurate prices at which you are supposed to enter the market on the MetaTrader. So let me just edit it, because let me just do what I would as to the price I want to put, as the price I want it to be, like this 143.851. So I'll just do it 143.851. Just check the stop loss, profit level, stop level. You can edit it to whatever amount you want. So it will automatically change the prices. Let me see. So you saw how we change the price, so you can see. So let me use the bar replay to make you understand how it's done. Bar replay button. My bar replay here. Let me see. Hold on. So let me move it down so that you can understand. This is not I'm not taking a live trade though, so don't get it twisted. I just want to show you how the position tool works. But on the long run, when I start taking trading sessions, you will see how I use these tools very, very well. But at least with this tutorial, you'll be able to see how the tools work. In your spare time, you can go and you can learn how you can use the TradingView app or the MetaTrader app to know how these tools work in regards to market entry, stop losses, and take profits. So I'm going to do this, but first let me set a price. Let me try. Okay, don't let me set the price yet. Let me first play this so you see how it works. So you can see I've entered the market. You can see it showed that I hit stop loss here. So to this point, so you understand. So if I had moved it here too, for instance, if I had moved, if my price was around this place here, my price entry was there, and I place the position to here. Let me say I place it here. So I just want to show you how the long position works. So just watch this. You see, I'm now in TP. It's going up, and so the long position candle is for take profits. You understand? And the sell position is for the long position tool is for buy, usually used for buy, and the short position tool is for sell. So now this is a buy trade here that I placed. You can see my entry from this point here. This is my entry up to this point here. That is my take profits, and here is my stop loss. That's for buy position. Please, if you have enjoyed this video so far, remember to like this video, comment, subscribe to this YouTube channel, and turn on post notifications to get more contents like this. So moving on to the other position too, that's the short position too. So let me just show you. So I'm going to add it to my favorite. Right, let me delete this. So just show you how to use the short position tool too. So now this short position too, because I'm shorting, that's selling. I would want to place my entry at the top and wait for a TP, take profit, at the bottom, and my stop loss will be above my entry. So this is my, let me see, I want to enter from here. So you can see, you can just come here, check whatever setting your pips, whatever pips you want it to be for your take profit. I want a 1:2 risk to reward. So just simply do this. So the amount of pips that you enter, or stop loss that you enter, or take profits for different currency pairs varies. So you should know that. So let me say I just did that now. Let me adjust it a bit too. Let me say I just did that now. So I want to enter the trade. Let me say this is just a replay of previous market. Like I said, I made this content on a weekend, but when you have done all your analysis and you have seen a good entry and price, is when you use this position tool. So know to get the exact points that you'll be entering and the exact points that you'll be exact price that you'll be exiting the market, either by take profits or stop loss or partials. So let me just play this to explain how the short position tool works. You can see before it triggered my entry here, it already stopped me out first. And if my stop loss was bigger than this, it won't have stopped me out, and I'll also be in take profits here like this. So that's how the position tool works. So you want to add the position tools to your favorite position. So I have the trend line tool, we have the horizontal tool, we have the arrow tool, we have the rectangular tool, we have the buy position tool, the long position tool, we have the short position tool. So you can also look at every other tools too to see how they do, or like what to use them for. But these are like the major tools that you need to add to your charts, to your candlestick chart, or to your charts. So every other things are really not necessary in the app. You have this one is to set alerts, like to know price alerts. For instance, when you want to get when you're in a trade of maybe let me say when you're in a profitable trade, or in a particular trade and you want to get the market price of a particular level, you just simply use the alert tool on it. You can use the horizontal tool to make the alert tool, to make an alert, to set an alert. So let me say TP1. So TP1, you see alarm clock. Okay, now let me move it and use my position tool so you can see how it works. So let me use the short position tool here. Let me use the short position tool. Let me use it for this place. This is just for example, not so. I just want to show you how the alert works. So automatically, if I was in a live trade, I will get notified either via email, or a notification is going to, like, I'm going to get alerts. You can see here, alerts active, date creation. You can see USD JPY, everything that I said. You can see the detail of the things that I said here. So these are how some of these tools work. This one is when you want to compare one symbol to the other. You can really use this feature when you are using a PC. That is when you'll be able to see this feature between two currency pairs. So let me try and add another currency pair to see if it will work. Let me see. Okay, so this is how that button works. You can see the pairs are working. So this other button is just for number of templates. I think indicators, those of you that want to start using indicators. And this other one is just an idea. If you have an idea of anything in the market, an indicator, a strategy, just type it here. So these are when you want to. This one is for when you want to change your candlestick. When you want to modify the candlesticks, you can choose the type of candlestick. Just observe the chart, see the type of candlesticks, see how the candlesticks are changing. So these other buttons are not really as important as the tools that you need for so that's that. So this explore button here is for to check news, top stories and all that, currency, economic news, look at different things, brokers, like just for you to just see like extra features of the app is just what is on this explore, and this other buttons here, the ideas button too is for other cool features that the TradingView app has. So TradingView app is free, whether or not you you're on paid or basic plan. You can use the TradingView app to like for free, but then you get to enjoy more features when you're on the paid plan than the free version. So that's that about it. Thanks for staying up to the end of this video. So in my next content, I'll be talking about the trade execution app, that is the meta quotes app, the MT app. So make sure you stick around to this channel, subscribe to this channel, like this video and comment. Let me know your suggestions and any questions that you need to ask or have to ask. But for now, I'll catch you later. Bye.